Hello and welcome to Livewise The Pitch. I'm Ali Selvi and today we're joined by Fidelity International's Amit Goel for a deep dive into Central and South America and whether you should consider investing in these regions today. Thank you so much for joining us today, Amit. Really excited to feature you on The Pitch.
Hi, Ali.
Okay, is it worth investing in Latin American companies today? And if so, why?
So when it comes to Latin America, I think it's been a more volatile asset class. If you think about long-term growth of two of the largest economies in Latin America, Brazil and Mexico, the long-term trend growth is not that great. I mean, we're talking about 2% plus minus, which is much lower than what you see in some of the economies in Asia. But also the volatility of that growth is very high. I mean, every 5-6 years you see a recessionary period in Brazil. Mexico is very much tied to US, so US cyclicality impacts Mexico as well. So I think you're talking about economies which are lower trend growth as well as more cyclical. And that is not a good backdrop for long-term investing. So you have to be very sure of the cyclicality, you have to pay lower multiple because growth is lower. But that doesn't mean that there are not good companies in these countries to invest in. I think for us, like bottom-up investors, I think there are still a good bunch of companies to choose from to benefit from some of the structural changes that we see in these countries. For example, when it comes to Brazil, there is a lot of digitization happening in financial space. That financial inclusion of digital financial inclusion of the Brazilian population can throw up opportunities. There are very good companies which are consolidating markets in a lower growth market, benefiting from better capital management as well as their purchasing power versus their clients. So I think there are very specific themes in countries like Brazil which you can buy and have a medium to long-term view. When it comes to Mexico, they're getting benefited by this diversification of global supply chains. I mean, US is trying to import less from China and in turn importing more from countries like Mexico, India, ASEAN. Mexico being very close to US gets more benefit of it. So I think there are some of these structural things in place. There are some cyclical things in place. And if you combine both of them, I think you still get a good opportunity set to buy companies in Latin America.
What other trends are you seeing in these regions right now that you think investors should be taking a closer look at?
I think what to me which is a positive development in Brazil is that the country is improving its fiscal and external balance sheet. They have become net exporter of oil. Commodities in general have been stronger in last 3-4 years, which is a positive development for Brazil because it's a net commodity exporter, whether you are talking about hard commodities like iron ore or soft commodities like food. So I think they have become more export competitive. They were net importer of oil, they have found oil, they're exploring more oil, so they have become a net exporter of oil. So they have improved their external situation, which is a tailwind for the economy to grow faster over medium term. At the same time, digitization is happening, which improves productivity in the market. And you know what has happened in Brazil is that it is the biggest real rate economy in the world now. Rates are 13. Inflation is 4-5, so Brazil has about 8% real rate, which is very high for any country. So whenever you see Fed cutting rates, which probably happens second half of the year, Brazil has a lot of monetary room to ease, which can drive the markets. So I think this rate cycle in Brazil is throwing up very good opportunities for us in stocks which are rate sensitive and which are more aligned to real rate decline in Brazil. When it comes to Mexico, I think there is a positive tailwind from the fact that US wants to import less from China and more from regions like Mexico, India, ASEAN. So in this global diversification of supply chain, Mexico has a positive impact. And there is investments happening on the ground, manufacturing capacities have been created, infrastructure has been created, which is helping companies in sectors like cement, steel, etc. We are very much more focused on long-term beneficiaries of this growth. So I think we like the banking sector in Mexico. We like some large Mexican conglomerate companies which have logistic business, copper mining business. We like airports in Mexico because they will generally benefit from the higher GDP growth, but air travel penetration will also improve. These Mexican airports are also very strong channel from travel to US to and fro. So they will get benefit from that commercial travel improving. So I think we are while we understand that short-term tailspin from imports into US, but we also think that there are some long-term companies which benefit from this long-term trend. So we are very much focused on some of these opportunities in Mexico.
You've only talked about Brazil and Mexico today. Does that mean you wouldn't invest in any other countries within Latin America?
If you take out Brazil and Mexico, I mean, we are talking about Chile, Argentina, Colombia, Peru. I mean, we do look at companies in some of these economies, especially banks, because we run large funds. I mean, we can't invest in smaller companies. But as a group outside Brazil and Mexico, it's a very small part of our universe, and even more volatile than what you see in Brazil and Mexico. So I think there are few opportunities in these countries. These are small, these are more volatile. So we have to be very selective outside Brazil and Mexico.
Okay. What risks do investors need to be aware of when investing in Brazil and Mexico?
I think the biggest risk we need to be aware of is cyclicality. Like Brazil is still very much tied to some of the commodities. If you see significant correction in some of these commodities, that has a negative impact. The political environment becomes unstable a lot of times, stable at some times, so you have to think about political cycles as well. Mexico is going through an election this year. What happens, who get elected, does it mean policy change, how does it work with US? So some of these things you have to worry about. Brazil went through elections last year, so there, I think there's some political continuity there. So I think I would say cyclicality of markets and political cycles are the two things which investors need to be aware when they invest in Latin America.
Okay, well, thank you so much for your time today, Amit. It was a pleasure to have you on The Pitch.
Thanks for having me here.
If you enjoyed that too, don't forget to subscribe to Livewire's YouTube channel. We're adding so much great content just like this every single week.